What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 20th of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I not only want to spend some time to give a very important update on Bitcoin's price, as we've been trending for 6 days above the 21-day moving average. I want to talk about what this means for price, what to watch for in order to continue higher. But outside of that, we're also going to be diving into the altcoin indices and talking about my top 3 medium risk, medium reward altcoin setups that you can take in the event of a further uptrend in Bitcoin. We got a ton to dive in today, as well as the macro. So if you guys happen to enjoy the video, consider dropping a like. It's one of the greatest ways you can support the content. And I want to let you guys know that this video is brought to you by our partner, crypto.com, one of the top platforms you can utilize for all your cryptocurrency related activities. And if you're interested to learn more, stay tuned for later on in the video. So let's go ahead and kick things off here. I want to spend some time to talk about an update on price. Bitcoin made a 7.5% move back on May 15th. And since then, it's really changed the paradigm of what we need to look for in price, and it could very well be one of the initial signs of a further continuation of the upside. As we talked about again here, guys, while we do believe that there's still that opportunity for Bitcoin to come down here below the 200-day moving average, as we are probably due for a nice cool down and more sideways correction in the market over a longer period of time, at the same time, we are going to follow what price tells us here. And a break above the 21-day here is the second step towards reclaiming that confidence. The first was the retest of the 100-day, where buyers eventually came in here, pricing up against the 21-day and not breaking down below to the 100-day again, but rather breaking above the 21-day moving average. This is very similar to what we saw back here in late January to early February. The third and final step here that I think could definitely give some signs of confidence here to continue trending higher for both Bitcoin and altcoins is for us to be able to come down to this 21-day moving average and be able to hold it for a prolonged period of time. As we can see back here from late January to early February, it took more than a week here of testing that 21-day moving average before really even making any sizable move. But once that was done, once it was clear that the 21-day could start servicing as support again, that's what led to the continued rally here. Albeit, I wouldn't expect it to be as dramatic as it was back here, because this was really when a lot of those ETF inflows were coming in. Maybe that changes. Maybe we get the inflows again. But so far, we're not seeing that huge surge like we were seeing back here. The key point above all, though, is to focus in on price action, guys. It is going to be your biggest guide here. And if that 21-day, once potentially retested, does not hold, then that is likely your sign here that you're not only coming down to the 100-day, but you're probably coming down to the 200-day, that there's not enough demand to really satisfy support at this price range, and that we've been in multiple months of temporary distribution, or potentially a cycle top, or potential top, at least in this overall move. I'm not here to claim that that is exactly what's going on here, guys. And to be honest, I think there is a really great favorable risk-reward setup if we get down to that 200-day moving average, where I will be building some positions. But the key thing above all that I want to dive into is taking a look across the indices, because while Bitcoin is above its 21-day moving average, I think it's a little bit of I think it would be a mistake to simply focus in on just Bitcoin's price. It's why we don't focus just solely on Bitcoin here in this channel. We trade heavily in the altcoin space. I think that's where you're going to really make the big money. You can do it in spot markets. You don't even have to toy with leverage and all these things that are just going to really increase your risk profile and potentially leave you losing a lot of money. I like to look at what I'm seeing here on the more risk-on metrics in the market. I look at the indices for others, right, which are taking all the altcoin market, excluding the top 10 plays, also as well total 3, total 2, that are cutting out Bitcoin, Ethereum, etc. What do we find here? Well, again, I emphasize a lot to people just how quick altcoins can take a dive. We saw this 32% dip back here in early to mid-April, and since then we've just been really chopping sideways, fighting with those moving averages, seeing if accumulators are going to be able to set the foundation for higher levels, dry up the order books, and let spot demand continue to drive prices higher. So far, we have not seen that. We are not really above our 21-day moving average in any significant way. We're really trending right in line with the pocket, and outside of that as well, the 100-day is continuing to expand higher here and act as resistance on the days when we are starting to bump up a little bit in price and valuation. So this is not a really good sign to see, especially as someone as myself who really is only interested in severely exposing myself to altcoins right now. Again, it's not that I wouldn't make a trade on Bitcoin, but I'm not really of the kind of hodl mentality here when Bitcoin has made multiples upon multiples. It's nowhere near the kind of returns I made in the past off Bitcoin. So it's not really interesting. I think the value proposition is really going to be in the altcoin market. If we take a look here at total 3, which is kind of the next best risk gauge here, right? This is excluding Bitcoin and Ethereum. We can see here that we are trending above both the 100-day and the 21-day. So looking at least pretty good here compared to where we were back here during, kind of the mid part of April when we had many retests here below the 100-day. Right, every single time retesting that 100-day with more confidence here, not dipping as dramatically low as the prior time before. We can see here we really had a nice clean bounce, less than 72 hours worth of trading activity here at that 100-day, and now we're trading in a similar range here. So no serious optimistic wave yet, no reason to feel like you need to FOMO, but at least positive signs here to see on total 3. Total 2, on the other hand, which is weighing in Ethereum, we can see very similar to others' market cap here, this way down to the 100-day. And I really want to emphasize here that we're seeing kind of two corners of the market right now that are showing weakness, and these indices prove it, is essentially Ethereum. Ethereum is continuing to show weakness. You can see it in the ETH to BTC pair. We've been warning about that for a long time. Not to say that there can't be some short-term swing opportunities, but generally speaking, Ethereum has been a long-term underperformer against Bitcoin as other L2s are eating its market share alive, not to mention Solana and other L1s. But beyond that as well, you're seeing really the others market cap, the kind of whole swarm of meme coins, small cap plays in, real world assets, AI, or DeepIn, any kind of project you can think of that's not in the top 10 really is really, generally speaking, facing some pain. There's a few exceptions in the market, right? So this is a really important thing to keep in mind. When you really weigh in that total element here, Bitcoin is holding the strength here, and that's pretty typical within history. But above all, I want to see that the overall market is not so diluted, and I want to see essentially that others market cap as well will be able to get above that 100-day for a real sign of confidence. We are already seeing here that we're above the 21-day on Bitcoin, but really the two things I'm watching for is Bitcoin to come down to that 21-day. If you could hold on there for a couple days, that's my cue. That's a sign where I can feel comfortable taking some risk, especially if I start to see that momentum building off the 21-day. And outside of that as well, also seeing others market cap. That's really going to be my gauge to start taking action, start going long on the altcoins, not so much focusing on Bitcoin or trying to make a couple percentage points trading spot Bitcoin. There are a couple plays that I think overall you guys can definitely keep on your radar. One of them is Stacks. Stacks has again been probably one of the weaker performing ones, and for me, I think this will really offer, as we've seen, Stacks is very directional in its moves. I know some people like to focus on performers, underperformers. I'm looking for trade setups. And what I see here time and time again is that Stacks gets to relatively oversold levels and has some pretty significant spikes. We could even bring it here to the Binance pair, and you'll see this as well. Just huge upward reversals here against Bitcoin. We had oversold bounces here in June of 2023. Where Stacks went from 1,700 sats here to around 3,000. We had one here from 2,700 here to 4,900, almost going all the way right back up to the highs. You could see here as well, right? Oversold below the 200-day, spiking up here from essentially 1,800 sats here to 4,400. Wow. So sometimes more than 100% moves against Bitcoin. I think this is one that you guys can keep on your radar. We don't have a position in Stacks just yet, but for me, I really like seeing that Stacks is down at much healthier levels versus Bitcoin. This also goes in regards to its dollar pair. We're down to the 200-day here, again, making a really nice percentage move here in its run up, having a healthy correction. But bear in mind here, for the longer term, I think these plays could continue to bleed. I think there's just a potential opportunity where they could start to rebound in the event of altcoins, maybe picking up, for example, we see Stacks come up here into the 100-day pocket, which is another 70 cents from where it's at, around $2 to $2.70. So that's a really solid percentage gain here in dollar terms. I think it'd be realistic to see something like that. We already saw similar rebound moves here, for example, on I'll get the measurement a little more accurate here, but you can see we had a 55% rebound here from bottom to top within a matter of just probably 2 trading weeks. I think that something like that could play out, and that's again something where I'd be interested in potential swing setup. Outside of that as well, we've also got Render. Render right now in its BTC comparative getting below that 21-day, not looking good here, but at the same time, I'm interested in potentially getting a buy the dip opportunity below that 100-day. And its BTC pair, right? Got a little bit overshot in the short term, and now it's starting to correct. I think here at that 100-day, you might get a bounce off there. Again, as we were seeing more and more positive reactions with that 100-day across the board on most altcoins. This has been really kind of one of the market leader plays. There's also other plays like GLM and Akash that are also in this league as well of DeepIn AI related plays, or basically distributed GPU networks. But I think overall you've got a better risk reward adjusted setup here getting in at the 100-day, and especially if you're down here in this pocket between the 100-day and 200-day, which I honestly don't know if we're going to get that in the event that Bitcoin starts to hold in that 21-day. Either way, definitely something to keep in your radar. Getting that 1200 again would be a really cool opportunity in my opinion. And the third one I wanted to talk about here as well is talking about Fetch. Now, some of you probably already are aware that Fetch and Singularity and Ocean Protocol are essentially going to be doing a merge where all of their tokens are going to migrate into one particular token, ASI. And this is essentially the projects themselves kind of joining together in forces to become like this overall large cap AI play in the crypto space. Now, depending on whether or not you're really bullish on this long term, I have to say from a valuation perspective and like the strength of the narrative, at the end of the day, guys, it's just all momentum. It's all about, is the narrative really there? Are people going to continue to trade this higher and bet on it going higher? Fetch is essentially alongside these projects when they do migrate, FET, from my understanding, will be merged 1-to-1. So if you have one token of FET today, you will have one token of the new ASI token, right? So I use kind of Fetch as a benchmark. But if you look at all three plays and their current, the fully diluted valuation of what this project's going to list at is probably going to be somewhere around like $5-6 billion right now. And I know that sounds like a lot. And obviously you might be asking rightful questions like myself on like, okay, what are they building? What is the services they're offering? And that's probably a topic for another time that we can maybe dive into for those who are really excited about the actual fundamentals. But in regards to just price at the end of the day, guys, in valuation, if you want my perspective, I'm not affiliated with the project by any means. We don't even own any positions in these plays right now. But I got to say, that to me sounds like one of those great medium risk, medium reward setups. And the price action is looking good. It's doing very similar things, albeit spending a little bit more time at the 100-day this time around, as a lot of altcoins did. We can see the 100-day serving as that line of support. Not spending much time below it, right? In fact, this time, seeing every single time getting bought up in that 100-day pocket. And then again, testing up against that 21-day. I want to see a nice break above that 21-day for multiple trading days and no fades, similar to what we saw back here. I'm happy to pay a premium. But the idea here is that this could really go on and go to $4 or $5 in the event of a further uptrend, potentially even higher if Bitcoin really starts taking off, getting close to the 75, 80K, potentially up to 100K target that a lot of people are going for. This is just one of those plays that I feel would be like, again, as I mentioned, a medium risk, medium reward bet. It's not a small cap. It's not going to do, in my opinion, a 10x by any means, but it's something that could easily double from this point on, just getting back up to the prior highs, right? We take a look here. That would easily get us up 57%. I think, again, if we're talking about going up into this range here around $4.50, $5, you're talking about a really solid move here in a very short period of time. But keep in mind, there is some risk associated with this, and I bring up the drawings here on the chart just to showcase this. Historically speaking, since back in 2019, this is where Fetch tops out on the logarithmic chart. And we're definitely have to consider here that since November 2022, this has gone from 6 cents. So I do not want anyone to be bag holders here. And I would say, again, if you are not leaning into those moving averages as kind of your protection, right? For us, it's a great risk reward setup. If this snaps below the 100-day, what I'm basically saying is you could be in an entry now. And if it breaks below that 100-day and really doesn't have the confidence there, again, maybe you don't sell it immediately, but you de-risk the position, and then if it starts to trend back higher again above the 21-day, you can re-enter, right, and then hold that position. But the idea here, above all, we've got a really good risk-reward setup here, not only from the factor of price action, which so far looks pretty good, and we've got those moving averages to kind of serve as a line of support, but beyond that as well, I think it's imperative to understand that there are projects every single day, okay, not every single day, but on a given monthly basis, there are at least 3 to 5 new projects launching out with near fully diluted valuations, the equivalent of these 3 projects combining together to make the largest AI project in the crypto space. There are projects that are launching with that kind of valuation out the gate that come out of nowhere. There are also projects that launch with bigger fully diluted valuations. So from a price action perspective, kind of a multiple expansion perspective, I think there's a very good chance here that this one can easily rebound to pretty significant levels from where we are now in the event of a further continuation in crypto. Not to mention the AI narrative is still strong. And that's really going to be something that we need to discuss here later on in the video when we talk about Nvidia and the broader AI trend. But I want to let you guys know that if you're interested in any of these plays like Stacks or Render, FET or Fetch, or if you're interested in even some plays that are maybe difficult to trade in other narratives like Ordinals or Ordi, which is one of the ones we've been keeping on our radar here for a break above the 21-day, there are not many exchanges out there that are going to be able to cover the ground of all these plays. Luckily, Crypto.com will cover a lot of them. Crypto.com is one of the largest cryptocurrency exchanges in the cryptocurrency industry. We've been partnered with them for the past few months, and Crypto.com offers one of the best experiences when it comes to providing an all-in-one home for your cryptocurrency related activities, not to mention your neobank or fintech activities. If you think about it, Crypto.com not only has its key mobile application, which is where its bread and butter is, it's focused on mobile, albeit there is, in the case of Crypto.com, they have Prime and a couple other different tools you can utilize on the desktop, like their NFT marketplace. But the big thing above all is giving you that all-in-one mobile application that allows you to manage your crypto assets, so you can buy and sell over 250 different cryptocurrencies in a whole range of different jurisdictions across the world. But outside of that as well, you also have the ability to earn. So you're able to earn on top of your cryptocurrencies, being able to get yield on that crypto asset, those crypto assets, or on stablecoins. So you can tap into staking as well as earning capabilities through lending and borrowing. But beyond all this as well, I think one of the biggest things that they offer is their loyalty program. I've seen a lot of different cryptocurrency platforms out there that try to stay competitive on fees. They try to stay competitive on what kind of tokens they offer, but really no focus above all around customer loyalty and utilizing the platform itself. And as you're using the platform more for trading and using it for other activities like the Crypto.com card, where you can actually go out there and spend, at the end of the day, giving you some kind of rewards for that. Well, Crypto.com is obviously known for the card rewards that you get if you go into the higher tiers of the debit card that they offer. But they also have a built-in loyalty program for people who are essentially trading on the application and doing other types of key activities. You get earn plus bonuses on stablecoins, as well as trading rebates on your trading activities. So this is all really great stuff. And I think above all, if you're looking for a platform to really kind of sink into, I definitely recommend you give Crypto.com a try. See if it's for you, if the platform feels smooth, if you have access to the coins you want, if the trading fees are fair. But above all, not only does it meet on these qualities, in my opinion, but it also has a great loyalty rewards program that pays forward on you utilizing the platform. So definitely consider checking it out down below at the link in the description. If you guys are interested to learn more about Crypto.com, you can use my referral link down below. Not only helps out the channel, but potentially can help you guys really get started even quicker on Crypto.com and utilizing the platform. So I want to go ahead here and talk a little bit about what's going on here in the broader macro markets, because there are some really important things that are going to be happening this week. Now, I know, especially as much as the next guy, Russ and many people I admire are always watching the economic events in the calendar. These are things that can definitely spike a volatility, can lead people to kind of getting sidelined if there's a big upset to the upside or downside on inflation metrics, on economic, unemployment data, etc. But the big thing I want you guys to be focused on this week is something that actually has to do with earnings. And this is Nvidia's earnings. Now, the reason why this is very imperative here is because earnings are huge events here, not only for Nvidia, in this case, as it's been continuing to grow and grow as a company at a lot of market valuation, but as it is the darling of the AI trend here, and we were just talking about Fetch, for example, we need to track what Nvidia is doing here. Because if we get another kind of 16% move like we saw in the last earnings report, that is going to have massive ramifications on the broader performance of equities, or like the one we had back here where Nvidia went up over 24%. I have no doubt if you simply lay over the NASDAQ here, you see a similar correlation here where the NASDAQ makes substantial moves off of these earnings events, right? When there's a huge upset on earnings. And as Nvidia is a much larger company, it not only weighs, essentially weighs up the different indices in the market as it's become a multi-trillion-dollar company now, but outside of that as well, it is the pioneer in the AI trend here, as it is the leading GPU manufacturer, the biggest beneficiary of this broader AI trend of any company that's publicly traded. So keep that in mind here, that this Wednesday there's going to be an earnings report for Nvidia here that we need to keep on our radar. My understanding is that it would be at the close, so after the market closes. So really, you're going to see post-market some of the reaction, but really what happens where things are opening up on Thursday could really continue a positive shift and really lead us towards what we've discussed, a potential major blow-off top in the AI trend, where I think overall there's a very safe environment to go really heavily risk on altcoins for a very short window of time and be more aggressive on profit taking along the way. And in the event that Nvidia really has a big upset in earnings, I would use that as a precursor to really de-risk from crypto if you've already got positions, and probably hold back until Bitcoin goes below the 200-day, as well as other coins and other measurements of the broader altcoin market. Right now, we've had a really great rebound since back here on April 19th. We've seen Nvidia recover over the past few weeks, really over the last month here, from $780 a share up to $924. But we have seen some hesitancy over the last 2 days. And if that continues to build up here, it might be kind of a precursor or a fair warning to an upside in earnings. We're going to see. There's no really predicting this, guys. I'm above all focused here. I'm summoning cash now. I made great money in Q1. I'm sitting back really thinking about, okay, after this Nvidia earnings move, how is that going to impact crypto markets, and where can the trade setups be? We talked about some of them today. There will be other ones as well, which we'll share in the Dash Report group if we decide to take any. And if you guys want to check that out, you can check it out down below in the description. It's our newsletter. We have an alerts group, etc. You guys can join in and be a part of. We have a great community. People are sharing opportunities and what they're seeing in the market. So there's all kinds of stuff you can get access to. But the main thing above all is we're going to be watching that Bitcoin 21-day move. Bitcoin drives things to the end of the day, guys. And if Bitcoin isn't trending higher, it is very unlikely that you are going to see other coins or altcoins providing optimal trade setups. Not to say that there won't be some rebounds along the way, that there won't be some days where there's an upset, altcoins go up 5-10%. But the question is whether or not that trend is going to be sustained. We're not here to catch falling knives. We're here to ride the wave of broader trends if they present themselves. And if they don't, if we can't keep holding on that 21-day, and this is just a pop here, a temporary one, right? Similar to the one we had back here on May 3rd of 6.5%, or the multi-day rally here from 61K to 67K that just gets faded again. We do not need to FOMO in. We're sitting comfortably here, waiting for the signs to present themselves. And so far, we've got 2/3 of what we need. We went to the 100-day, we got above the 21-day. Now it's about retesting it and making it support. And the inflow or outflows of the ETFs, what happens with Nvidia, what we're seeing on the other indices in crypto are all going to give us hints about answering that question. So, thanks so much, guys, for tuning in as always. If you enjoyed this video, consider dropping a like. Feel free to check out crypto.com down below in the description. Got a link down there that you guys can use. But above all, have a great rest of your day, and I'll see you guys right back here on Wednesday. Take care, everyone.